Hello, guys, and welcome to our live analysis for the pound dollar today. And we're going to be running you through the technical and the both the technical and the fundamental analysis for the pound dollar today. All right, so we'll be kicking off straight up with hello, guys, and welcome to our live analysis for the pound
kicking off
dollar.
straight off with the analysis right from our last call, which was day before yesterday. On Tuesday, we're going to be refreshing our last trade call of Tuesday, and we will watch how it played out. And then afterwards we would check out what we have in stock for us in the market today and going forward into the week. All right. So we'll be moving straight to the charts. All right, guys. So you're welcome back, and like I said, we're going straight to our charts to explain how that trade went about and
We'll be giving you detailed information of that particular trade. And then afterwards, we'll be telling you what we expect in the market come this New York session for today and possibly for tomorrow, which is Friday. All right. So we're moving straight to the charts. Charts, I put it on the charts. I put it on the charts. It's not showing my chart. Check this one. Okay, so straight to the charts. On Tuesday, we told you about the shorts we're expecting. We're expecting to short the pound dollar on Tuesday. So I'll quickly run you through that and how it played out. For those who are in our paid group and those who are in our pro group, we were able to share our analysis with you. And even for those of you who are in the free Telegram group, we told you about it, how that we're expecting to short the dollar, sorry, to short the GBP USD on New York session on Tuesday. All right, so we said we're expecting the GBP USD to possibly make a return. I remember the video that we had, the live video we had on Tuesday. We told you, I think price was around this level, and we told you that we're expecting. Oh, sorry about that. So we told you that we're expecting price to get back to that low and then possibly return to the other block that we highlighted somewhere around here. Although price violated the order block, all right, price violated it, but then afterwards we told you how that we expected it to still come down, and this is the short here, around here. Yes, this was it. Okay, no, price didn't violate the order block actually. Price came back to reach the order block around 9:45 p.m. Nigerian time, and then we had this shot. So I remember the analysis was done in the morning, and after that analysis was done in the morning, we saw how price came back to this level. For some of us here at the floor, and some of our paid students were able to take advantage of that opportunity. Mind you, we didn't give out a signal. We don't offer signal services here. We just show you our trademark markups and we educate you on how we arrive at that decision. All right. So before then, we told you that our analysis for the GBP USD was bearish through the week, going into Tuesday, from Monday to Tuesday, even going into Wednesday. All right, so we saw how that short played out. And the target for that short was Friday's low. If you remember, we called it out. We said the target was the low of Friday. yeah, which is the orange line, orange horizontal line you can see. So we're expecting price to clear out Friday's low, right? And price did so after the retracement into mid New York, and we saw the expansion that took out Friday's low, which was the short that we called out. About 40 pips was caught in the trade overall. We didn't allow it to run all through. The moment it cleared Friday's low, we took off profit. About 40 pips was caught, and that was decent enough for a day trader. All right, so going into Wednesday, we saw the FOMC news that came out, and before the FOMC, there was speculations of a weaker dollar, which had a reflection on the pound dollar. We saw it buying up to this level, taking out Friday's high. So for us, we didn't engage in the market for Wednesdays because what we do is that when we are not certain of the market directions, especially when there are so many news events. All right, so since this week, like I said on Tuesday, we had so many news events, so we're always trying to trade carefully. We trade mostly on London sessions when the news are not so much, and then we try to avoid the New York sessions except for Tuesday because we didn't have any serious news. It was just jobs opening on Tuesday. All right, so for Wednesday, we had ISM services, and by 3 p.m. yesterday, we had ADP by 1:15 p.m. That's a non-farm employment change. And then we had the FOMC Fed funds rate by 7 p.m. yesterday. That was on Wednesday. We knew that the market is not going to give us so much as we would want, and we're going to see many of our analysis violated. So we stayed off. That was why we didn't get any updates on Wednesday. Now coming into today being Thursday, because of how heavy we have fundamentals, because of the heavy fundamentals we've been having this week off the market, except for some who would love to scalp. We scalped, I think, about 10 to 15 pips off today, and we were off the market. And we'll run you through that particular analysis of how we're able to just get a few things and we ran out of the market. All right. So coming into today, we saw the market trading above the Asian session, taking out the high of Friday. So after price takes out a high, like we have in our playbook, what we expect after an expansion that grabs liquidity is a retracement. So we traded that retracement because we've seen price take out the high of Friday, which is a very obvious high and an important point to note. So we saw price take out the high after the Fed funds rate yesterday and larger part of Asian session. All right, so price took out that high, and on the lower time frame we saw that the 15 on the 15 minutes to be precise, we saw coming into this morning in the London session, we saw that price wicked a bit off the Asian range, showing us a signature for a sell entry because we're expecting a retracement as at London session this morning. We expected a retracement of the buy trend, which was already established on GBPUSD. So that was what made us to take that sell trade, and we were able to catch a few pips of that. And we, as I told you earlier, we had to um, pocket our profits to be able to secure it. You know, we're trading a prop account. We are not trading to be right. We are trading to make money, to pass our evaluation phase and the verification phase, possibly to trade into profit when we have our live accounts. So that is the mentality we always encourage our traders to have. You don't have to necessarily be right. You just need to make some few pips off the market and then you are out of the market, right? So after we saw price trade above the Asian range on smaller time frames, smaller than the 15 minutes and the 1 minute, we started seeing break of market structure right about here. Yeah, right about here. We saw the break of market structure, and everyone has its own signature entries. So we use our signature entry, perfect break of market structure on the 1 minute. Immediately after the price took out the Asian high, all right, that's above the Asian range. And then after the break of structure, we took our sell trade, right, somewhere around here. a minimal stop loss and we were able to catch about 20 pips. We left the market at about 20 pips. We didn't want to get everything off the market because the goal is not to be right. The goal is to just make money and pass your various stages. All right. So after this last expansion, we exited, and of course, after that expansion, we've been seeing price tracing back into the original buy trend. All right. So for many other people who would not want to be involved in short trades like this 10 20 pips, I would suggest you wait till next week when the coast becomes much clearer, when there are no more heavy fundamentals or high impact fundamentals in the market, so that you can trade normally, because the average daily range of GBPUSD is about 70 pips. So in a session, you should be able to get 30 to 50 pips, whether London, New York, or Asian session. You should be able to get 30 to 50 pips. But for this week, we just go for the scalp and then we are out. We go for the little crumbs we can get, 10 20 pips, risking 1% of your account. You should be up by some good percentage, right? So for tomorrow, we may not be seeing so much because we're going to be having NFP by about 1:30 or thereabout. Yes, by 1:30 tomorrow. We're going to be see we're going to see the NFP news, non-farm payroll news, and because of that, we may see the institutions trying to price in the NFP by London session. So if we're not able to get clear trades on London session, then we'll just stay clear off the charts throughout tomorrow and resume on Monday. All right. So if we're not able to see something tangible off the charts by tomorrow, we'll just stay off, because this week is clearly a very dull trading week, except for yesterday that we saw the buy, but then we were not so optimistic about it, so we decided to just stay off that buy of yesterday. All right, so we may still stay off the chart so that by next week we'll be able to resume normal trading behaviors. When the market resumes normal trading behaviors, we as well will be able to resume our normal trading behaviors next week. All right, so that will be all. If you've not joined our free financial freedom through prop trading group, you should join that. We're going to be leaving the link to that group on this video. That is where we drop our live calls, and then we drop our weekly calls there too. And then if you want to learn how we make such analysis, you feel free to make inquiries. We have our Forex Bootcamp, which is already ongoing as we speak. We just had a session with the guys this morning. Some of them already watched this video. We had a very interactive session with them this morning, about a 2 hour session where we taught them how we trade and how we make such trade calls. All right. So those are the different phases of our products. And for those of you who are in this group, you keep seeing videos like this. We give you live commentaries of the trades we took, and at some point and at some occasions, we will give you our trade markup. All right. For now, we're having a very choppy week, and we'll have to stay very conservative. We'll apply our conservative approach, which is taking 10 20 pips off the market, and we are out. And on some days that we have heavy fundamentals, we just stay clear of the market. All right. So for now, GBPUSD has cleared a high. We're expecting some retracement down to about equilibrium or a discount level. All right. We don't expect so much from the buy because the buy is already in a premium level. So we expect it to come down to a discount level or at least equilibrium of this whole swing. So for now, we are still maintaining our bearish bias on the GBP USD. All right, so for today's New York session, like we said, we don't have so much expectations of the market, but we still expect price to trade down to at least equilibrium of the whole setup, equilibrium of the whole swing, which is around 125,342 levels. All right, we expect price to sell further down to 125,342 levels, somewhere around here. I'll highlight it in case we come back for another session. Somewhere around here, we expect price to sell back into before we resume our sell trend. All right, so that's our expectations for GBP USD going into today's New York session, the Asian session, London and New York for tomorrow. Okay, all right, that will be all for today.
Cheers and see you tomorrow. Remember to join our free group. It's very free. It's open to everybody, whether you're a newbie, whether you are an OB. Feel free to join the group. We'll drop the Telegram link right in the comment section. Sorry, in the link or in the comment section of this particular video. And we'll see you next time. Cheers and remain blessed.